All right. I want to update you guys a little bit here on some things I've been studying and working on. Um, so, you know, with our model, um, not our model, I mean, you could, I want you guys trading however you want to trade, but basically, like, I think we all know that, like, the best place to take trades or reversals are not even take the reversal, but the best places to find the reversal are like above 30-minute highs, above 90-minute highs, um, cycle highs, above prior day highs, prior day lows, session lows, equal lows, um, weekly highs, weekly lows, things of that nature. We all know that. Um, and then we all know how the reversal forms and how to kind of like visualize that with an SMR, low risk buy, etc., and framing it into a market maker model. Um, but I think the thing that we're lacking is just straight up price action management, and I kind of want to get into that with these PD arrays that I've been studying. So let's start with, I'm just going to type them out here. So volume imbalance, order blocks, rejection blocks, propulsion blocks. These two are new. I mean, not new. They're going to be new for what I'm going to be sharing with you guys. You guys might already know what these are, but um, may not. Breakers, we all know that. Mitigation blocks, we all know those. Um, those are the main ones, really. Order block um, is just a variation. A propulsion block is a variation of an order block. I'll show you guys what it is. Fair value gaps. So I think, you know, finding the reversal and pinpointing the reversal of some sort, which is basically just framing a market maker model, like that's sort of what you need to do, is just frame out a market maker model wherever you can find it and just jump on board. So frame out the MMX model, okay? And then really what I want us to do, and I think will improve everyone's trading, is if we utilize these PD arrays within the overall model and just trade these PD arrays rather than like trying to catch the whole model or trying to catch um, the larger moves. I think we can really stack up a lot of orders within these PD arrays. But let me just show you what I'm talking about. So let me download this. Okay. And then, okay. Please go away. Okay, there we go. Let's get into, I've got some stuff marked out here. So let's go over a few of these PD arrays. I'm not going to go over really anything other than like rejection blocks, propulsion blocks, and maybe volume imbalances again. If you guys don't understand those, I think we all understand breakers, order blocks, mitigation blocks, but it's these propulsion blocks and rejection blocks that can be used that can really amplify your trading. So, let's just start with like what is each of them. So a propulsion block, let's start with that. So let's just go with this one here. So we have the order block, okay? So this here is an order block, okay? These two down closed candles are considered an order block, okay? This is all ICT teachings, nothing new or proprietary. So this is an order block. This candle, order block. And it becomes an order block the moment that we trade above the high. So the moment we trade above the high is here at 1257. That then becomes an order block. So we have that marked. And then we have this candle come down into the order block and then hold price. Okay, so we have one order block, basically two order blocks, but this one is a propulsion block. And this is not the greatest example, but it's still a propulsion block. We just didn't come back down to test it. So I'll show you other examples in a second, but I just want to go over the basics of like what makes it a propulsion block. And basically, it's an order block where we've rallied from, so we've shown signs of bullishness. You know, like we're thinking of getting long, like we want to be long down here, so we're going to utilize a bullish order block. So that becomes a bullish order block. This one taps into it. Price runs away. So like at this point, this is a propulsion block. And the way you can utilize a propulsion block is with the 50% of the body. Okay? So the cool thing about a propulsion block is that you can really minimize your stop loss because the reaction will be on the top of the propulsion block. So if price comes back down into this, we want to see a reaction there, no further than here. Like we don't want a body closure below 50% of this block. Okay? So 50% of the body. You want to use the body of the propulsion block. But the most sensitive portion should be the high or the open of that propulsion block whenever price comes back down into it. Okay? And this one does it in a way because we do open low, run higher, creating that as an order block, which turns into a propulsion block because it tapped into this order block. Okay, it's kind of confusing, but it's really not once you get the hang of it. And then price opens here, we run a little bit lower, we stay above 50%, and we run higher. So, like, if you're wanting to get long here, you know, you can be long. You'd probably want to be long at the top, okay, at the open. And then your stop can actually be here on the 50% of that propulsion block or just below the body. But mentally, you don't want a body closure below the 50%. If that happens, just get out. Okay? Just get out of that trade. So, let's play this on. We know what a propulsion block is now. Let's look at a few more examples here. This is just from Friday's run higher. All right. Let's look at this example here. So, we have, I'm going to remove the breaker because that's unnecessary. Okay, that breaker, unnecessary to have. We all know what those are. I mean, right, like low, higher, low, that's a breaker. Okay, this full candle is a breaker. Price gets supported in there. Propulsion blocks. So honestly, what I really like about these are you can use them inside the accumulation or inside the smart money reversal to get you like an earlier entry. You know what I mean? Like you're not going to see a breaker in the SMR. You know what I mean? Like in the low point or high point of the trade, like you're not going to see the breaker. The breaker's going to be later. But what you can help validate the trade and like see price go from bearish to bullish are order blocks, propulsion blocks, rejection blocks, volume imbalances as well. But those, because You know what I mean? Like right here, volume imbalances. Okay, 1, 2, that's a volume imbalance. We come down, we respect it. Okay. You can use these types of PD arrays early in the trade. Not even to get in, but just to visualize like, hey, price is actually like bullish right now. Like price action is bullish. We're respecting these volume imbalances. We're respecting these order blocks. Price is showing me bullish signs. Like, let me try and get in somewhere. Okay. 3 in a row here. We gap up, we trade down, we gap up, we trade down, we gap up, we trade down. And like I said in the other video, that's signs of really bullish price. So, propulsion block. This is the order block, okay? This candle here, this down close candle is the order block, okay? We trade down as soon as we trade above the high. So as soon as we trade above the high with this candle here, it validates this as the order block, okay? Come down, we're into the order block, and we run away again. Not these, this one. The last down close, the largest down close. Like that would be your order block, not this. This would be your order block. So this becomes the propulsion block. Because we're inside of an order block, we tap down into an order block and we ran away, creating another order block within an order block, which deems this propulsion block. The high should be the most sensitive. The high or the open should be the most sensitive there. Okay, we rally above. So at 128, that becomes a propulsion block and you become a buyer. All right. So we tap into it. You can go long, and you can, like I said, long here, stop down below, stop at the 50%. I mean, you can see like how well this actually works. We tap into the top, we run away, we come back, we tap into the top, but we don't even get to the 50%, and we just keep running. Like, that's a strong market. That's a good propulsion block right here. Okay, you take that, 1 to 5, and this keeps running, but like this is a great way to get in on a trend. So like I said, entry here, stop loss down below 50%, or if there's something down here that you're a little unsure of, you can drop your stop a little lower, but it's balanced. Like this is balanced. Okay, we tap the rejection block, we run higher, we open, we sell, we open, we run lower, we run higher, we close, we open, we run lower. It's balanced. So there's no reason it should come in past the 50% of that. All right. So a propulsion block example number 2, and this one actually, had a trade. That one didn't have a trade, but it's still a propulsion block. I think that's pretty clear. It's not hard. Not hard at all. So you have to have an order block. You have to have a run higher. You have to be bullish. You have to have a reason to be long. You know what I mean? Like, it's obviously, if you're bearish, like, it's not going to work. Like, if price is trending down, it's not going to work. You have to wait for price to show movement in the upside direction, and that makes these propulsion blocks valid. You know what I mean? Like, if we're just trailing down through here, like, yeah, order block, we run higher. Okay, we have an order block. We ran higher. Oh, it's an order block. We're going to go long. Okay, we run lower. It validates. It disqualifies the order block, but we run higher. Like, okay, this is a rejection block, or this is a propulsion block. Order block within an order block. Okay, we should come down and make that high, and respect that high. Like, that's not right. Okay, because we're in a downtrend. Like, we're rolling over. We're trending down. Like, you have to be in a bullish environment. You have to be, you know what I mean? Like, it has to be moving up for this to work. In other words, you have to be right. Like, it's not a big deal. Anyway, that's propulsion block. Let's move on to the rejection block. So, a rejection block is the so a rejection block is the largest wick. Okay, so the open or the close of the largest wick on a high or a low, on a swing high or a swing low. So, might be a little confusing because I'm probably not teaching it exactly right, but let me just show you. So what I mean, we come down and we make a swing here, okay? The rejection block becomes this. So you have a low and you run away. This is the rejection block, okay? So from this open to that bottom of the wick, all right? That's the rejection block. Same thing, you want to have the sensitivity at the top here, okay? So up at the top is where it wants to be most sensitive, and you don't want to have price close through this, okay? You want to see a wick down through it, to it, and through it. Wick through it and back, okay? Wick down into it and back up. So we have the formation of the low here. Where's the largest wick? The longest wick down would be here. So it's the close of that candle becomes the rejection block. So it's really not utilized in the same swing here. The way you work these are later. So like if price was to run away and come back down, we could tap into it and you could get long, expecting this low to hold. Okay, we wick down into that maybe, and you expect that low to hold, okay? That's how you can utilize the rejection block. So let's just look at an actual example that like really works. This one here is a pretty good example. Okay, rejection block here. So we're going lower. We hit some support here with the breaker. We run higher. Where's the largest wick down is this candle. So the opening price of that becomes the rejection block. Really, you want to just use the opening price. There's really no reason to unless it's a huge wick, just use the opening price or the closing price if it's a bearish candle. But it's the whole block from the open to the low is the block, and we run higher, we come back down, and we tap that exactly. So if you look here, the open of this candle is 21,148.50. The low of this candle is 21,148.50. Okay, exact. That's a rejection block. It's basically just retesting the open of the candle that created the movement higher. That one's perfect. A lot of times they wick through and go back, but that one's to the point, to the tick. Let's look at another example here. All right. So we've rounded out the top, made a run lower, and then made a run higher. Okay, so once, you're not going to mark that out as soon as it happens, like right here. That's not a rejection block yet, okay? It's not a rejection block until we significantly run higher, like making a new high. Okay, so once it runs to here, that becomes a rejection block. All right. Same here. Once we run and make this new high, that can become your rejection block. That becomes the new high. This is the new leg. This is the rejection block in that leg. We have these volume imbalances, fair value gap, all that. What I like about these are sort of like the last line of defense. You know, okay, it's coming down. Where's my break point? If it runs through that rejection block, if it runs through that open and closes below the open, I need to get out. Okay. So instead of placing your stop below the low, You know, you can just have a mental stop, like if it violates that rejection block or the 50% of that wick, just get out. And let's see how we do here. So price comes down, we tap into the rejection block, we open, we gap lower, we run higher, we run into that rejection block, and we close above it. We open here and run higher. Okay. It's a rejection block there. And with these, you really don't want to see the body close. Okay, you don't want to see the body of this candle close below the open of this candle. You want that opening price to hold the bodies. Okay. Let's see, what else do we have? All right. Have another one here as well. This one's not as good because we only run a little bit higher. But nevertheless, it's okay. The low, the swing low, the low point, the biggest wick, the open, rejection block. Okay, so we run higher. We're like, okay, that needs to hold or I'm done. Let's check it out. The open of this, 262.75. The low of this, 262.75. Okay, to the tick. Right on that opening price. And we run higher, bumping into previous day low. And these can be used multiple times as well. In this trendy example, like they're just tapped and then it runs, but in other examples, you know, it can be, you can wick into that rejection block multiple times. All right. Let's see what else we can find. Let's see if we can find something here in this little consolidation. Okay. Let's see. Let's use this as an order block. Okay, order block. We run higher. Okay, when we get above the high, so this candle validates that order block and we run down into it. Okay, running down, down, down. And we run higher. Propulsion block. This candle here. That body, extend it. Propulsion block. Because we dipped into this order block. And then from there, we ran higher over top of this high, making this a propulsion block. So the next candles, this candle here, opens, runs lower, doesn't close below the 50% of the body. This candle opens, opens, opens. One more time, 50% of that, and then it's off. Okay? So this is another example of a propulsion block. You can go down below. Looks like this one would have maybe stopped you out if you went so tight like that, but you have to just kind of play around with that. Like, you can go below the block completely until you've taken enough reps of it and become comfortable with it. I'm a little more conservative with my stops, so like I don't really care to risk 10 points. Like, that's not a lot to me. I really don't want to be risking 3 points, 6 points. Like, I'm not that good yet. So you really need to give it space. But anyway, 50% respects, runs away. Let's see, what else? What else did I want to go over? Volume imbalances, order blocks, rejection blocks, propulsion breakers, mitigation. So let's see if we can utilize a volume imbalance. So a volume imbalance, Max had the question. I forget what the exact question was, but it can be tapped into multiple times. I believe he was asking if it could be utilized multiple times, like by a wick, and yes, like it can be for sure. You just don't want to see a body close it out. So like this example here, there's your volume imbalance. Okay, a bearish volume imbalance. So like, you know, if you're obviously like fighting the trend here and you're like, okay, I'm gonna get short here, You know, we tap up into the volume imbalance. Maybe you get short. Maybe you get short. It wicks up into it, and you're like, okay, I'm short. I'm gonna make some money. Next candle, close it in. Done. Wipe that off. It's useless. From this point on, it's useless. From 150 on, that's useless. These are useful. Okay, 1, 2, those are useful. Once the body closes in the volume imbalance, it's useless. Even with these, you know, like these get closed in, they're useless. Done. What price was going for is the rejection block. Yeah, I mean, hopefully that helps. I mean, really, where you want to be utilizing volume imbalances, from what I can tell, are in the extremes. So, like, you know what I mean with the extreme? So, like, the extreme high or the extreme low. Like, if we look up here, like this little volume imbalance, tiny volume imbalance here between these two candles, like, really not relevant because you have a really large gap above it. Like, if there was a volume imbalance up here, that would be more useful, in my opinion. Let's see if we can find another one. Let's just go, what was that, Friday? Friday kind of sucked. Let's just go back and look at, I think I actually did some work on a couple weeks ago on a Monday. I got some good stuff here. Yeah, this I'm not too sure about. I actually sent ICT an email. I'll see what he says about it. But I think I did show you guys this. Like, I'm just not sure if this is actually something or if, you know, like we have a sell side delivery here, the wick down, okay, just the candle makes a wick, closes higher, and then we open here and then trade higher without a wick. But I've noticed a lot of times, like, price will come back and tap into these and then run away, like here. We get that wick down, filling this sell side, okay, because there's nothing here. So from this candle's low, down to here, like there's no sell side delivery. Okay, we have that fair value gap, but we also have this wickless candle all the way down to the open. So I don't know. Just kind of like monitor that stuff as like being unbalanced. I don't know what to call it. Let's see. Let's look here. So this is like a really good example, like below 6 a.m., kind of like in that first macro, 6 to 6:15, order block, propulsion block. So here we dip down in, we run higher, that becomes the order block, this becomes the propulsion block. And let's see how we did with the 50%. Okay. Alright, so that's our propulsion block, the second order block. So order block stacked on another one. That's the propulsion. You want to see the response in the highest part of this candle. We wick, and run. 50% remains unclosed. This is a good volume imbalance as well. Alright. So when you have a volume imbalance with no gap below it, like no unbalanced price below it, it's a good one to utilize. You know what I mean? Like if this wick was way lower and there was a fair value gap in here, it wouldn't be as useful. But when price is balanced down below it, and that's the lowest thing, like basically what you have here is a fair value gap here to here. Okay, But what ICT teaches is to use the fair value gap with the volume imbalance. Okay? When we run higher, we have the breaker. Okay, we get above it. And let's get up here. Turtle soup. This is above 6 a.m. Turtle soup. Displace lower. So this is also a 30-minute cycle high sweep. Okay. So this is a 30-minute cycle high. We sweep it. We run lower. Fair value gap here. Order block here. So this is the order block. Okay. That's the order block with a fair value gap. That makes this, once we trade lower, okay, that high candle, that up close candle there is the propulsion block. Order block, second order block, which is the propulsion block. Runs lower, okay, so right here. As soon as this happens, this is the propulsion block. Okay, as soon as this candle closes, as soon as it runs below the low, honestly, you're thinking that's a propulsion block, let me mark it, let me look at 50%, let me consider like throwing on a short, a limit, or just like be ready on the trigger on the market. You know, stop above here, something like that, because you've had the run higher, the turtle soup, displacement lower, hit the fair value gap, we've filled the inefficiencies here, we've ran lower, so I'm thinking let me get a tight stop. SMR, low risk sell, okay, equal lows, 6 a.m. open. Price goes down one more. Now we have the fair value gap and the propulsion block, so you can either enter down here or you can enter on both, okay? So this is where you can really take advantage. So yeah, we tap that, I'm gonna sell again if we hit that, thinking if we close above the 50% I'm out anyway. We come up, we tap it, I'm selling again, and it's wickless, and this candle like doesn't have a wick with a volume imbalance below, so it likely needs to fill, so that's automatically going to put me in profit. Okay, we filled it, now I'm basically here. Okay, I'm here on the stop, equal lows down below, first target, 6 a.m. open, 30-minute cycle low previously. So 6 a.m., 30-minute cycle low, somewhere along there can be the target. This displacement, leaving this order block, okay, leaving a fair value gap likely. Anything back up in there would be another add, but we just run. Okay, we just run lower. Run lower, fill the volume imbalance. Okay. Let's see what else we can find here. All right, let's look here. So we make another cycle high, turtle soup. We run lower, breaker, fair value gap with the volume imbalance, also a fair value gap above. So to me, like, you have to give it that space, so this would require a really large stop, because if you're going to go in there, you have to give it room up to here, preferably up to here, because that doesn't have a wick. I don't like putting a stop above something without a wick. But anyway, runs lower, runs higher, gets your short entry, displace, immediate rebalance. So this is another one I don't really talk about, but it's a really good signature when you have, so we go here, all right. So let's go here, we're short. Okay. Boom, that's exactly what we want to see. Now, this needs rebalanced, okay? Price comes up and immediately rebalances and rejects. Now, that's an immediate rebalance, yeah, but the only thing that makes it an immediate rebalance that actually works is if it runs away from that after that, okay? So if we come back and rebalance on the next candle and then run higher, doesn't mean shit. It just means you got stopped out. But if you're in the right narrative, price will just run away. And then once that candle closes, you know you're on the right side, okay? Because we've ran lower, we've come up, we hit that gap, lower, rebalance immediately, lower. Now we can rebalance again. Not quite. Okay. Volume imbalance. Taps it here. Rejects. Runs lower. Back to 6 a.m. And let's look at this again, just to ingrain this in your head. Tap 6 a.m. This is what I mean by, like, you can use this stuff in the accumulation, like in the consolidation. Because, like, where do we want to get long? Below 6 a.m. Where do we want to get short? Above or at? So we want to get long at 6 a.m. or below. At 6 a.m. or below. We want to short at 6 a.m. or above. So here we run lower, we tap 6 a.m. That's a point of support. We're considering longs. We run higher here. That makes that an order block. We run higher there. That makes both of these an order block, okay? Consecutively, they're an order block. And then what do we have? This guy comes back down, taps in, next candle runs above. Propulsion block right here. Next candle, we come down, tap the top, responsive, close down below the top, 50% remains untapped, unchanged, not even traded to, which happens a lot. Next candles, we run away, and the buy program starts. Propulsion block, order block, fair value gap, tap into the fair value gap, we run higher, up to New York open, midnight open, sorry. And what do we have over here? So this down close candle, biggest wick, the closing price. What is that? What is that? Rejection block. That's a rejection block. See what I mean? It's everywhere. Down close, reject that rejection block, forms an order block, forms a propulsion block. Why are you not long? At 6 a.m., at a discount. You know what I mean? Like, you can find trades almost anywhere. Definitely, like, any time of the day. But, you know, we know the most opportune times. If you trade these within the macro, it's even more successful. Okay. Let's see. All right, so we get close to the open. We run out all the stops here. Okay, we take all these lows, these equal lows get swept. Okay, so this becomes your rejection block. We run that, we run higher. Rejection block here. Doesn't get tapped. Doesn't offer a position long. What do we have here? Down close, run higher, order block, possibly a propulsion block. We do have this consecutive down close, so that's actually one order block. So let's go here, down close, come back down into it. It's definitely, like, you don't really want to use this as your order block, okay? It's just too big. Too much happens between then and there. So what ends up happening is you have your order block here. Okay, comes down, taps into it, we run away. So at this point, it becomes a propulsion block. All right, once this candle runs above the high, that's a propulsion block, and we're considering longs back into it. So that's a long. We run higher. And then 9:30 opens, so like same stuff. Get on the 15-second, especially when the range is just jumping. You're not going to have any PD arrays. You know what I mean? Like if you stay on the 1 minute, like institutional order flow entry drill here, but stops pretty wide. But if you know, you know. But I mean, who doesn't like a tighter stop? So what do? 15-second. And let's look. Expansion, retrace, consolidation, accumulation, lowest wick, close lower, run higher, close lower, run higher. Once we're at this point, this can be a rejection block. Price comes down into it. What's the low? 235.25. 235.25. That's like the third example I've shown where it's like to the tick. I mean, it's undeniable. All right. Let's look. Not an order block. Order block. Okay. This is an order block. We trade above it. That becomes an order block. We trade down into it. Okay, you can kind of say that's a propulsion block, but I don't know. It's not that valid, honestly, because we did violate the low of that order block. So take it whatever. You know, maybe it's not that. Like maybe let's just take that off. We still have the rejection block. Okay, and then we still have this as an order block here. We run higher, higher, higher. Order block. That's a 1 minute order block. Okay, 1 minute order block. Let's go back into the 15-second, see if we can find anything else good. Okay, rejection block would be here at the close. Rejection block would be here at the close. Blah, blah, blah. We don't really have anything there. Fair value gap. Anyway. That's pretty much it, guys. So this can also be used on any time frame. Preferably, like, for the way we trade, you want to be on the lower time frames. But let me know if you guys have any questions on any of these. Volume imbalance, order blocks, rejection block, propulsion, fair value gap. Like I said, rejection blocks, propulsion blocks, order blocks, those are what you see like during an accumulation, during a consolidation. And that's when we can utilize that stuff, like in these tricky moments here, like when it's still real tight and it's rolling over. That's when you need to be utilizing order blocks, okay, propulsion blocks, rejection blocks, things of that nature that are at the extreme ends of the range where you're not going to see like the breaker. Like that's going to be one of the last things you see You know, like when we break down below a breaker, that's you're looking late. That's late. That's like the most obvious thing. You want to get up here and look at things at the extreme end of the range. Okay? Like here, where's the biggest wick? That's the rejection block. Remember, the largest wick. This becomes an order block. Okay? You want to just start looking at these things. Start visualizing them, start looking at them. Obviously it runs away, but we do come back into the fair value gap here. Okay? Here's that thing I was talking about, wickless candle, no buy side delivery. We come up, we fill it, we run lower. You know, I don't know what to call that, like I said, but just know that that's unbalanced, right? That's all that is. That's just an unbalanced range, and you have to consider that. There's no fair value gap above. There's no volume imbalance above. The only thing is a rejection block here. But we went to that, okay? And maybe, yeah, we zoom into that and we see a 15-second something. I don't know. Probably, yeah, so a 15-second fair value gap in there. But, you know, I don't know. It's more obvious on the 1 minute. All right. We come up in there, and like if you're just not wanting to throw an order short, we come up in there and you're a little hesitant to just lay on a short, just look at price. Look at how we roll. So that's not an order block yet. Nothing. Okay, nothing. So we're looking at an up close candle but to become an order block. Where does it become an order block? Here. Here's an order block. Okay. Here's your order block. Okay, we ran the low. That's your rejection block. That's the highest wick in the reversal. The largest wick in the swing. This becomes your propulsion block. The body of these two candles becomes your propulsion block. It's not utilized, we just run straight through it, but you need to start looking at price like this, candle by candle. And if the 1 minute's too fast, use the 5 minute. There's nothing wrong with that. Okay. Now you get your breaker. But see what I mean? It's always like too late. It's not too late, but there's a lot of little ingredients, a lot of little signs in price action before these other things that we need to utilize. So it can help us determine like if our reversal is reversing. You know what I mean? Like instead of just like, okay, we close here, I'm going to go short. We close there, I'm going to go short. Yeah, if you're right, it works. But it takes a long time. You have a large stop. And there's just a lot of things you could be looking at in the meantime to confirm or deny your trade. Okay? So, you know, let's not be lazy with it and just like, hey, yeah, okay, we closed. I'm thinking reversal, changing the state of delivery. But when we retrace, let me be ready mentally for price to come up into here. Let me be ready for that. Okay? Like I want to be ready for that so I don't get stopped out. So I keep my stop in an area that makes sense. And then when we start reacting up in here, creating order blocks, propulsion blocks, I want to stack in the orders. Okay? And when we run, same thing. When the price starts running, you just look for the same things. Like if you've missed the trade and it's already like this, but your draw and liquidity is still down below, you still have that sell side targeting, but you're too late because you're just scared to put an order on, you still have chances. You still have a fair value gap, but I don't want to get in on that candle. We trade lower. That's an order block. As soon as we trade below that, you could hit a sell order, considering that could be your order block. Stop above. Okay. You close there. Just use that, you know? And you could still get 2 orders in this little period of time. In this little tiny run, in this 130 point run that you completely missed the reversal on, you can get an order there. Fair value gap turns into an order block. Just market order into it short. What happens after that? We have another fair value gap. Okay. It's already moved away from your entry. You can add another entry. Add another entry on that fair value gap. You tap into it, you're short 2. Stop loss, can be up here, can be up here. Wherever you want to put it on a fair value gap, it's kind of up to you. You either put it here or you put it here. You put it above the swing. Or you put it right on the gap if you're really risky. So anyway, order there, and we hit sell side. Okay. Like there's no urgency to get in up here. Okay. You can, and like by all means, if you can, do it. But don't give up on it. Like you can always get in late. And that's when you get the bigger moves anyway. You get the SMR, you get the low risk sell, you get the distribution, redistribution. Like those first and second distributions are plenty of time to get in. All right, I'm going to end this now. It's been a little too long. If you guys have any questions, just reach out.